Regular investors make this $1,000 mistake because they don't understand the ex-dividend date trick. The ex-dividend date is the most critical day when buying dividend stocks. It determines whether you'll get paid or walk away empty-handed. Here's the secret most beginners miss. If you buy a stock before the ex-dividend date, you'll receive the next dividend payment. Buy it on or after that date, and you'll have to wait for the next round. Think of it like a concert ticket cutoff. Buy before the deadline, you're in. Buy after, you're watching from outside. Quick example. Company X announces a $2 dividend payment. Ex-dividend date is March 15th. Buy on March 14th, you get the dividend. Buy on March 15th, sorry, you'll need to wait for the next one. Pro tip, stock prices typically drop by approximately the dividend amount on the ex-dividend date. Don't panic when you see this. It's completely normal and expected. Many new investors chase high dividend yields without understanding this timing concept. They buy right after the ex-dividend date and wonder why they're not getting paid. Smart investors mark these dates on their calendars and plan their purchases accordingly. This simple knowledge can mean the difference between maximizing your dividend income or missing out entirely. Remember, the ex-dividend date is your golden ticket to dividend payments. Buy before, get paid. Buy after, wait for the next round. Time your purchases wisely and watch your dividend portfolio grow.